Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis and joining me is investment analyst Cristina Partheniou. We'll be discussing the Bank of Canada's upcoming policy meeting and the outlook for the loonie. So, Cristina, the Bank of Canada is one of the few central banks that did not participate in the 2019 global monetary easing trend, keeping interest rates steady instead. Do you think now that trade and Brexit uncertainty have taken a backseat, that a rate cut could be off the table this year?
Well, there are some important reasons to believe that interest rates will not move lower in Canada this year, at least in the near term, as markets expect to happen on Wednesday. As you said before, the ceasefire in trade and Brexit tensions is one of the reasons, because Canada is an export and commodity-dependent country, so any improvement in the global trade sentiment is positive for the Canadian businesses as well. Moreover, the labor market had an overall solid performance in 2019 despite the declines in October and November, while inflation, which is expected to hold slightly above the 2% target, is an advantage for the bank, as other central banks are still well below their inflation targets. Now, although these facts suggest that monetary policy is at the right place and there is no need for a rate cut, we shouldn't celebrate it yet. The whole economy had slowed down in the third quarter, and retail sales remained in negative territory. And that suggests that that domestic demand is still fragile. So someone could say that the Bank of Canada could cut interest rates in case the data sharply deteriorate later in the year, but this may not be as simple as it sounds, because as we all know, households in Canada are highly leveraged, so such a move would push households to a more unsustainable consumption. Therefore, I believe that lower interest rates are not in favor at the moment in Canada, but this doesn't mean that they won't be discussed during the year. Probably the bank could cut interest rates in case the data sharply deteriorate and tensions escalate further, but that may probably happen only after the Bank of Canada's governor resigns in June.
I see. So what do you think the central bank's tone will be this time, and how might that affect the loonie?
Well, I think that the central bank will hold a cautiously positive tone at this meeting that may be affected by the inflation readings released before the rate announcement. I mean, on the one hand, the central bank could be optimistic about the business sentiment thanks to the Brexit and trade relief, but on the other hand, it could highlight that negative risk could emerge in the second half of the year. Now how the loonie could react, that depends on whether markets are currently more optimistic than the central bank is. So if the central bank uses cautious comments, then that could push the loonie lower instead.
Cristina, thanks so much for joining me, and thanks for watching at xm.com.